Good morning, traders. Welcome to the Dots Trader Morning Call video for Monday, November 30th. Hope everybody enjoyed their Thanksgiving holiday here in the United States. We have one more day left of trading for November, and we're going to be looking out for mutual fund inflows, right? Mutual funds come in, they have to put money to work, and basically the markets have been flat this year. So could that mean that the Santa Claus rally can continue and push much higher? That's something that we're going to be watching in the coming days. There's a caveat here, though. Since mutual funds money is coming in next couple of days, and once that dries up, do we get into the tax selling period, which we do come into after the next couple of days, in the next week or so, getting into mid-month before options monthly expiration happens. So that's important, and you need to understand that. We're basically flat. So the traders, investors that have losses are going to take advantage of that and start really selling, and that could actually put a good push lower in the market. So just keep that in mind going in the next couple of weeks, guys, all right? Very, very important. But other than that, we've been really stagnant. We have gone nowhere. You can see here in these dojis, 1, 2, 3, 4, 5, 6. 6 trading days is a good part of the month. We did nothing here, okay? Now we're up a little bit in the pre-market. That does not mean that we can't move higher. It's just telling me that, okay, there's a lot of indecision. There's not enough catalyst, news event, anything to push this market higher and or lower. So for that matter, I'm taking the neutral stance to a slightly buy the dip mode because of mutual fund inflows coming today and tomorrow. Okay, so keep that in mind. But we do have this M pattern forming. You can see that, but we need to make that right side. Once we get that right side made up, we're looking for the 201.5 break. If we break that 201.5, guys, then we're going to see some further downside pressure, okay? You're going to see that in most of the charts here. Repetitive patterns, diamonds, pretty much the same. Let's go into the Dots Trader, open that up. You can see the M pattern forming. Hasn't formed yet and hasn't broken this neckline of 172. So if we take that out, then we start looking for lower prices, okay? But until then, you have to be suspect of any type of rally, push higher. I suspect that they're going to run the stops. And if you look at the ES, which is the futures contract, not shown here, 2100, we take that out, we're going to run up to 2106 to 2109 in the ES futures contract, okay? So just keep that in mind, guys. All right, next, the transports. We have a big symmetrical triangle here coming into the apex. Now, on the longer-term time frame, which I'm going to put a longer-term video out, we have a head and shoulders pattern in the transports and the Russell 2000, which is not good. Why? Because there are two main leaders, transports being our main leader and the Russell, a secondary leader of the 5 indices that I'm showing you. So we're coming into an apex. We need to either break out or break down. Now, we could have divergence for quite some time where the other indexes just continue to move higher and the Russell and the transports really kind of stay stagnant here. That's the problem. But that does not mean that you can't go buy stocks, right? You have to look at your parameters and look at your trading plan and identify what you're willing to risk, okay? That's the biggest part here. And also keep in mind that we do have market divergence, that the markets can turn on a dime at any given moment. So just keep that in mind, that we have this big symmetrical triangle on a daily chart of the transports, the IYT ETF. If we start to break up, I'm going to be looking to buy the dips and any back test of the transports. That's going to help solidify a market push going into the end of the year, okay? We do have a couple of caveats here, right? We got divergence. We got market divergence. We have China doing nothing. China's actually selling off. It's not rallying anymore. That's another no-no. That's something that I'm really worried about. And also we're coming into tax selling, year-end tax selling. So we have to be careful with that as well, okay? So just keep that in mind, guys, trading the next couple of weeks. Here is the IWMs. And you can see that the IWMs did get a good push up here, but way below the 200, not even close to being at the highs here. So this is something that's concerning to me as well, okay? Lastly is the Qs, and you can see the Qs also making an M pattern. I also showed you the holdings of the Qs. The top 10 guys are the Microsofts, the Google L, the Amazons, the Facebook, your Gilead. Those are the ones that are really pushing this market up. So just keep that in mind when you're trading. But we did get this little area where we filled the gap, and now we're forming another M formation. But we need to see this market move down and take that neckline down about 109-ish, okay? 109, 109 and a half. Okay, guys? Hope it helps. I do suspect we're going to get a little quiet time in the markets, which we've had about 6-7 days. But we are going to be coming into some good volatility in the next few days. I think we need to get through Monday and Tuesday and then really see where this market is headed. And I think that's going to be the caveat. That's actually going to dictate what direction the market's going to go. If the year-end tax selling is going to overcome any type of buying pressure, then we should head a little bit lower for the next couple of weeks before options monthly expiration. Hope it helps. We'll see you tomorrow. Take care.